The best things to do before the crash and the financial recession arrives. So, what can we do to brace ourselves for the impact of this brutal recession? To find out, let's take a step back and examine the lessons of history in order to gain a better understanding of the situation and what we can do to safeguard ourselves. Hedge fund manager Michael Burry, who gained fame for accurately predicting the 2008 housing market crash, has issued a warning about an impending financial crisis that will be even more severe. In an interview with Business Insider, Burry stated that the next market downturn will be worse than the 2008 crash and will have long-lasting effects that will impact a whole generation. He likened the situation to the idiom, "When it rains, it pours," suggesting that once a good or bad situation arises, it tends to be followed by more good or bad situations. Since the start of 2022, there's been a decline in the economy, particularly in the stock market. The purpose of this video is to investigate the reasons that led Michael Burry to predict a financial crash in the past and to explain why he believes that an even greater one is approaching that could have a significant impact on future generations. This video will also provide guidance on how you can protect yourself and your family from any potential risks that could result in significant financial losses. The Great Recession, also known as the 2008 financial crisis, was a significant event that highlighted the need for individuals to prepare for economic downturns. As Robert Kiyosaki, an American investor, once said, "While a financial crisis can be devastating for the average person, it can represent an opportunity for professional investors." This statement holds true, as demonstrated by the recent COVID-19 pandemic. While many people experienced financial difficulties, some, such as Elon Musk, were able to benefit greatly. He's an excellent example of an individual who profited during this period, eventually becoming the world's wealthiest person, surpassing even Amazon billionaire Jeff Bezos. Burry began his career as a resident in neurology and later pathology at Stanford Hospital. He then moved into hedge fund management, focusing on distressed companies with potential for appreciation. During this time, he witnessed the 2000 dot-com bubble burst and the 9/11 attacks, which caused economic damage to the United States during a moderate recession. Burry has recently made bold claims that the stock market, crypto market, and other assets are about to experience an epic crash. But the question remains as to how soon this will happen. Burry has made similar predictions in the past that eventually came true, but the consequence of such a crash could be severe. In 2000, Burry closed his website where he advised people on investment choices and started his own hedge fund, Scion Capital, which managed $600 million within 4 years. Burry rejected money from new clients to focus on his current investment deals. He studied a lot before starting his own investment company, which helped him to make wise investment choices and attract more investors. Burry's high intelligence in investment helped him to predict danger ahead and change his investment style accordingly. When Burry decided to short the market due to his analysis that subprime mortgages and related bonds were prone to lose value, some of his clients pulled out their invested capital. However, in the long run, Burry gained massively from his prediction, along with the investors who trusted him. This shows that taking risks that sometimes other people don't believe in can sometimes be a turning point for success. Burry has become a widely recognized figure around the world due to his successful predictions. He has many followers on his social media accounts who eagerly await his updates. Michael Burry is an excellent example of the importance of research and due diligence. He carefully analyzed the subprime mortgage market before making his investment, which paid off handsomely in the end. Despite Burry's recent deleted tweet about the crypto market crashing, you can still prepare and reevaluate your investment choices to avoid losses. To stay safe in the market, you can invest in companies that are less likely to be affected by downturns, or diversify your portfolio by investing in various asset classes such as bonds, real estate, and cash. This minimizes risks and protects your portfolio from losses. The stock market's crash in 2008 wasn't the end of an era, and there will be more booms and busts in the future. Bitcoin's price has already dropped significantly, and Burry's predictions of a worse fall seem likely. Burry believes several factors are setting the stage for another major market correction, including high levels of debt, inflated asset prices, and investor complacency. He warns that the next crash could come sooner than expected, so it's best to start preparing now. Barry compares the current economic situation to an overcrowded theater with a small exit, and as investors rush to exit the market, they risk trampling over each other. Some countries are taking measures to curb the dollar's increase against their currencies, such as intervening in foreign exchange markets or raising interest rates. Recently, the pound hit a record low against the US dollar. Greg Jensen, Bridgewater Associates' chief investor, is one of the economists who supports Barry's claims about the impending great crash. According to Jensen, it's highly unlikely that prices will return to pre-COVID levels. Despite recent downturns and crashes, Barry believes we haven't hit rock bottom yet. If this is true and we see a more severe crash, we could be heading towards a crisis worse than the Great Depression. The recent crypto crash was caused by several factors, including the recovery from COVID-19, high inflation rates, the Terra Luna crash, the Russian-Ukraine war, and supply chain issues. This led to a decrease in demand for crypto and a subsequent decrease in prices. The crash was worsened by people selling off their holdings, which led to further price declines. A market crash is a sudden and significant decline in asset prices, typically associated with panic selling, which can have a profound impact on the economy. It can occur in any asset market, but it's most commonly associated with the stock market. A market crash is typically triggered by an unexpected event that causes investors to lose confidence in the future prospects of the market. This can lead to a rapid and dramatic sell-off of assets as investors attempt to cash out before prices decline further. Market crashes can have a ripple effect on the economy, leading to a loss of confidence in the financial system, as well as a decrease in business spending and job losses. When a financial bubble bursts, the prices of assets plummet, often causing widespread economic chaos. Investors are typically the most affected because they often have large amounts of money invested in the asset that's lost value. Non-investors can also be affected as the economic recession that follows the bubble burst can lead to job losses, wage cuts, and a decrease in overall spending. The movie The Big Short ended with a puzzling line that Michael Barry is only focused on one commodity, which is water. This statement shouldn't be overthought, but it's an eye-opener to show what Michael Barry has been up to and how you can leverage his trading methods. Investing in water may seem odd, but it has recently joined the trading market, just like oil and gold. If you don't act fast, you might miss out on this development. Benjamin Franklin, one of the founding fathers of the United States, once famously stated that we only realize the value of water when the well runs dry. Therefore, it's imperative to take Barry's warnings seriously, as he has a history of accurately predicting significant market moments. Barry was on spot with his predictions about the housing market crash, and he's now cautioned that the forthcoming market crash will be even more substantial. Investors should be ready for this financial crisis and be prepared accordingly.